Fantastic. Well, welcome everyone. I'm delighted to welcome our next presenter to the stage. Zachary Manns is co-host of the Stock Waves and Mining Stocks service within the ElliotWaveTrader.net, providing wave alerts and trade setups on individual stocks as well as the miners model portfolio. He also co-hosts the site's weekly beginner circle webinar for new members. One of the founding members of the EWT site, Mr. Manns began working in finance as an investment advisor in 2008 and adopted Elliott Wave theory. Zach, the stage is yours.
Thank you very much. I appreciate it. So the topic of my presentation today is on a pattern that we started to notice evolving, fitting within the Elliott Wave parameters, but happening with incredible frequency among IPOs. And so we playfully dubbed it the CABPIPO pattern, and we can explain that later. I shared a couple of links in the chat. One of those is just to an early article that I co-wrote with Avi Gilbert back in 2015 about when we first started to recognize this pattern, and then another refresh of that article on Seeking Alpha, and then as well as some other educational information and things on our Stockwaves platform. We're not going to get into the details of Elliott Wave theory for this presentation because I want to focus on what we notice as far as the diagonals go. But we would like to give you kind of a very brief crash course in what we look for in terms of Elliott Wave structure. The basic components of Elliott Wave structure are 5-wave moves and 3-wave moves. 5-wave moves are numbered 1, 2, 3, 4, 5 at varying degrees, and 3-wave moves are usually labeled ABC and also at varying degrees. And the whole thing, it's also important to note that the whole thing is fractals. So the structure that you see as a 1, 2, 3, 4, 5 and an ABC could be the wave 1 and the wave 2 of an even larger pattern. And the same thing is that in each leg you can drill down and you can see those repeating structures. So one of the issues, since Stockwave's inception, about 10 years ago, I had always avoided charting new issues because they don't have established trends. So you're starting with brand new price history. Usually there's some wild fluctuation because they're coming on the market after a lot of hype leading up to that IPO. And Elliott Wave relies on mass sentiment and prior patterns so that you can get a bearings and have some context. And recent issues don't have that. All they have is the media hype. Despite that reluctance, I was always asked about the wild price movements in some of these new issue charts, even though they might have only had a handful of bars when I initially pulled them up. So back in 2015, there were a lot of very, very overhyped IPOs. In digging deeper, because I was asked by my members to take a look and do analysis on them, I started to see some distinct patterns emerging when I looked back at some of the prior IPOs from a few years before. Often there was an initial move that would head higher, not always though, followed by a very large ABC Elliott Wave corrective pattern that would often retrace somewhere around 50%, if not often more, of where that initially started trading on the exchange. That's not the same as the published IPO price. This was from the moment they hit the exchange, we usually saw a 50% retrace over time from that. So in November 2015, we put together some of these findings in that article with Avi Gilbert and why you should not buy IPOs. And basically, when a company has sufficient growth and interest that it's become a candidate for an IPO, it's most likely approaching the top of what we would call the 5th wave in Elliott Wave parlance. This is usually the stage within the cycle of a stock when the excitement for the stock has reached the point where it exceeds its true value. In fact, 5th waves often exhibit the largest amount of optimism and euphoria about the stock relative to the rest of the cycle. And that's often when we found that the IPOs were being released. And so what we know about 5th waves is that 5th waves, once the stock completes that wave, it usually retraces back towards the 50% or the 60% retrace from its high. So I have just kind of, this is from our education section, and this is kind of an example of an Elliott wave 5-wave move. And again, we said the whole thing is fractals. So, say an IPO is released at the top, as somewhere around here, it gets that fifth wave, that initial move higher, or maybe only the fifth of that fifth. And then it has a pretty big retrace cutting half of, at least half of that move in, well below. So you could also think of it in terms of maybe this is that first leg and the IPO comes out about here. It gets that initial move higher and then a big ABC move down. And sometimes that's a larger wave too, because based on when it started. But oftentimes you're getting that retrace about 50% haircut from wherever the stock started trading. So I put this out. Sometimes I'm a little bit snarky on the site. I like to joke around and have fun with the markets. So somebody a new member had probably asked me about some recent IPO. I don't even know what chart this actually was, but I pulled up the chart and it literally had 2 price bars here and just a whole bunch of black space. So this was probably more back in May 2019, so you might figure out what IPO it might have been. But I basically just drew a price pattern and said, it should get an initial little move up and then this big ABC move down. All of these charts and stock waves, I mark them with a big blue bar from where I can best tell they start trading on the exchange, and then look for that larger ABC price pattern. And again, everything in Elliott wave can subdivide into its component waves. So you have this A wave down can be an ABC move, the B wave up can be an ABC move, and then the C wave down should be a 1, 2, 3, 4, 5 waves down as a proportionate move to the C. So now I'm going to show you a bunch of examples, and then we'll talk a little bit more about some of the features and maybe some exceptions, and then we'll open it up to some questions. But I started to look back, when I was writing this article with Avi, and I said, what were some really high profile IPOs, that may have been so far removed from when they were IPOs now that we take it for granted that they're just these high flying, mainstream names as far as stocks. So I went back as far back as I could go on my Facebook chart, all the way back to its IPO back in May of 2012, and saw it got this initial pop higher. It IPO'd, I think the IPO price was I don't remember what the actual IPO price was, but I have IPO written here, but it came on the exchange right about 38. And then after that initial pop higher, which it looks small on this chart, but at the time it went from 38 and it jumped all the way up to 45. So that looked like a pretty big move higher of, at least over a course of a 2-hour bar. And then it proceeded to go over the next several months, a big ABC move down to about half the price of where that IPO on the exchange. From then on, we got 5 waves up in the start of a more bullish move, held a higher low as a corrective retrace, and Facebook went on to be uber bullish for years and years. Alibaba, going back to 2014, had an initial little decline, but then got that 5-wave move up, higher than where it started trading, right around $100. And then a big ABC move down. I have this labeled at a larger degree because it took the better part of a whole year to fill out. But again, ABC move in the A wave, ABC up in the B wave, 1, 2, 3, 4, 5-wave moves down in the C. Again, to 55 region, about half of the price of where that started trading on the exchange. Then it proceeded to get 5 waves up as a larger wave 1, held a higher low, and went on to be pretty bullish from there. Etsy was another one that we used in the example from that chart from the article back in 2015. It was probably one of the names that was prompting me to work on that article with Avi. Came on the exchange right around 31, got that initial pop higher up into the 35 region, then this large ABC move down, taking all the way down to the 6s, which is well more than just half of the initial 31 price. It didn't get a clear 5 waves up, but it did get what we considered a bullish move, as a more than just a corrective ABC retrace, but then it held a correction to a nice higher low, and continued to be bullish from then on. Snapchat. This is back in 2017. Looks like around April. That initial pop higher after it came on the exchange around 24, and then proceeded to get a nice ABC down, which was enough to satisfy all of the pattern into that 12 region, about half the price. It couldn't get a good looking bullish move off of the low. So it looked like a clearly corrective move, and we're looking for a bigger move down from there, even though it's well below that 50% that could have completed it. And then from that proportionate move down for the larger degree C wave down to 5, it got 5 waves up and held a higher low. This is the chart. I guess at the time, maybe something had an issue with my motive wave, so I was using TC2000 to chart the IPO for race. And again, it was, one of those snarky moments before I really took the pattern so seriously. We had written that first article. We were starting to dabble around and play with that, but somebody asked me about the Ferrari IPO. It had a little pop higher and then a little move off of that, but no other price history. This is a 2-hour chart. You can see it barely has a whole day of pricing activity. Drew this big A, B, C move down though, targeting the 31 region as a proportionate corrective retrace that would take it down to about half of where it started trading. And then over the course of the next several months, it filled out that exact ABC retrace right down to the 31 region. And then from there, it turned up. We got 5 waves up. We held a corrective retrace into target Fibonacci support at a higher low and went on to be bullish from there. Sprouts Farmers Market, another one that was back in 2014. We talked about it in the article. Another one that had all of the completed ABC into what we would initially look for in the low of 2015, but could never get anything really clearly bullish going to the upside, instead filling out a very clear ABC flat for a larger degree B wave, and then another 5 waves down to a proportionate low, but then it became bullish off of there after getting a more aggressive 5 waves up and holding a higher low as a corrective retrace. mRNA, another one that filled out the nice pattern. This had a more exaggerated initial move higher from the IPO, and then a little bit more of a skewed ABC retrace coming down from the May 2019 high. Instead of getting an A wave here and then a bigger B wave and a C wave down, it just decided to stretch all the way in the C wave from here, but did hit that price mark, came out around 21, hit down here in the 11s, and then got 5 waves up after that, held a corrective retrace as that wave 2 to a higher low. And that was something that we were able to be very, very bullish mRNA from the March 2020 lows. It was one of the ones that we featured in 2 of our different shopping lists. Duluth, DLTH, that IPO price right around 1350, an initial move higher. A lot of times this initial move higher we find fills out as an Elliott wave ending diagonal. That's where you have kind of a little bit more of a choppier overlapping pattern, but it's still a 5 wave move up. And then this big A, B, C move down, we can count those 5 waves down in the C wave, making that a high probability bottom, and a nice 5 waves move up off of that, and held a corrective consolidation, and then got another 5 wave move up and is holding so far, holding in that Fibonacci support. So it has nice bullish 1-2, 1-2 potential there. That's something that we like to look for a lot in Elliott wave. Mass came on the exchange around 45, didn't get a whole clean 5 waves up, and we have to consider that sometimes this is just completing some kind of pattern that we don't have the price history for. So this might have been the 3, 4, 5 of some bigger 5 wave move up there. But we did get a nice A, B, C move down. This, I haven't looked at this recently, but when I made this slide a few weeks ago, it was coming right into that ideal support. So maybe when the market bottoms here in the next couple days to a week, in our fourth wave consolidation. This might be putting in a pretty hefty bottom in the 18 to 16 region. Probably expect a nice 5-wave move up over the next couple of months, maybe back into the 40s. And that would be that initial maybe wave 1 up. And then if it can hold a corrective retrace from there, then it can be really long-term bullish. ARVL, another one that's on my radar, possibly bottoming in here. I haven't updated the chart from this slide, but should be getting a bottom here soon with the rest of the market, ideally around this 580 to 510 region. But again, came on the exchange around 20, got an initial ABC move down to the 10 region, which could have maybe completed all of the Cowabunga post-IPO pattern. But clearly got only 3-wave move up as another B wave and is filling out that 5 waves down for the larger C. There have been exceptions to the rule, but I think a lot of those exceptions prove the rule by virtue of being exceptions. I can't claim to have looked back at every chart to see if there is in fact a CABPIPO pattern hidden back at the beginning of it. But if you do a search for, we tag all of those charts when we find them, CABPIPO. If you do a search on that like that at Elliott Wave, at ElliottWaveTrader.net, you'll find hundreds of these. And most certainly most of them from the last 5 or so years have conformed to this pattern with very few exceptions. This is from more than 5 years ago, but this is one of the notable exceptions that I look back at, and this is Google. From 2004, it shot up right out of the gate from its IPO. It held a corrective retrace of that move up to a higher low, but never got lower than that initial IPO price and has continued to be very, very bullish. It got a very, very large wave 1 complete into its 2007 high, and then in 2009 held another higher low for a larger wave 2 bottom, and has been bullish, very, very bullish ever since. So what is the CAB? Most of you guys probably figured out that the IPO stands for IPO. The CAB is just, when I first started at Elliott Wave, I went by the name Cowabunga, and many of the members called me Cow. And sometimes I was wanting to be joking around but be a little bit more formal, so I made that Cow A.Bunga. And so those became my initials for things such as the Cowabunga post-IPO pattern, as well as a somewhat proprietary put-call ratio that I play around with on the SPX as well. That is pretty much all I have. Are there any questions? Oh, I did find there was just a new one today I can try and share. Let me share this window. I actually just posted this on, can you guys see Encino? ENCNO. So I posted about this before, but was reminded of it today as it was getting closer to our projected C-wave bottom. I really should start shorting more of these. I've only dabbled in that a little bit, but I like to trade charts that have more established patterns, but might have to start trading off of that 1-2 start to a possible C-wave down as a good high probability short setup. But this is coming into that 100% extension for a C-wave. So might bottom along with the market here in the next couple of days as well. But like that one, also like to make the references to Encino Man. So are there any questions? I know I kind of breezed through that, but my tendency is to be at either extreme of either going too fast or taking too long on some slides and not being able to finish.
We don't have any other questions other than if you could show the chart for Coinbase again. That was the only question so far.
Which one is Coinbase?
Was Coinbase not?
Coin?
Perhaps.
I don't think I think it's Coinbase. So probably should be blue, similar to a lot of those other ones. Should be pretty close. It's not the cleanest 5 waves down for the C wave. Possible that this is a WX and this is A, B, C for a Y wave. If it's going to hold in this 153 to 138 region, which would be the proportionate move down from the initial drop. But we were willing to give Coinbase the benefit of the doubt off of the low back here in June, because it did fill out enough of that blue ABC to be all of the Cowabunga post-IPO pattern, but it clearly only got an ABC move to the upside. So again, when it held a corrective consolidation from that move up to a higher low, then we could at least look for this measured move higher, and that was a great trade. But that filled out 5 waves up into the measured move target, and that looked like an ABC up as a bigger B wave, so we were looking lower. You're free to suggest any other recent or older IPOs, and we can pull up the chart and take a look and see if they fit the bill.
We got another question that just come through. What percentage of IPOs do not follow these patterns?
I'm not really good at quantifying stuff. When people ask me to quantify values that I don't have the data for, or it's not really quantifiable, I usually just say that like 84.3% of all statistics are made up. It's pretty low. The exceptions to the rule seem to prove the rule by virtue of being some of the few exceptions. So most IPOs that we look at have some of them, that initial move higher has tried to hold out a little bit longer and maybe taken a few months and gotten higher, where you might start to think, is this going to be the next Google that doesn't do it? But then they end up breaking that support, and then the pattern takes over. Robinhood, couldn't avoid it. I'm not sure. This is kind of like that move that we saw where, it didn't get a very pronounced B wave, and it's stretching a lot. This extension is much more than we typically see for a 5th wave extension for just an A wave in Robinhood here. I'm not sure at this point if this is still just an A wave or if maybe this is all of the pattern, but this is not a very reliable ABC to trade, as a high probability bottom for the long term. It could certainly get a decent bounce back up into the 20s soon, but that might only be a B wave. 23 to 38, if it's going to hold the 10 region, is going to be the normal targeted bounce zone for that larger B wave.
Hey, Zach, that's all the questions we have for right now.
Okay, great. We do take requests throughout the day. We have a tool set up at elliottwavetrader.net and for stock waves, also for the mining stocks service and for the crypto service, that allows members to search for. The tool is an all-in-one tool that allows members to search for recent charts on that name posted by the analysts. And if they don't see what they're looking for, then they can put in a request for that chart to be updated. And there's a lot of these that we cover pretty regularly.
All right,
Hey, Zach, you cut out there a little bit. Can you hear us?
Yeah, I can hear you fine.
Okay, sorry, we had a few more questions. I can hear you now. So for Coinbase, based on that ABC move down, is your starting point at the IPO price or first trade price?
So I look for a 50% retrace from where it looks like those first came on the exchange. So if you zoom in here, maybe if we go to a 15-minute and scroll back all the way back, at this initial little green bar right around 380, I think, where Coinbase started to trade, popped up from there and then started dropping down to 309 and then bounced again and then started to fill out this bigger A wave C wave down of this A wave.
Got it. Let's see what else we have here. Do you have a mining share opinion?
In terms of crypto mining stocks?
Yes.
Or, you know, I just look at stuff like the GBTC chart. There was a good chance that this was all of a fourth wave, and we had a nice looking 5-wave move up and a corrective retrace, and then got a really nice move up off of that low. But they couldn't hold high support in really October, started to falter. But then when it broke that low again in November, we started to look for a few alt potentials for this to maybe hold as something else. But the real risk was that this was ABC up for a bigger B wave in a wider flat, either for this same fourth or shifting it to a larger degree. So there is potential that this tries to hold a low sometime soon. But my problem with a lot of these crypto charts, in particular like GBTC, and some of the other ones are newer, so they don't even have the prior history, is that even as, I mean, if we jump to the larger degree, this wave 2, then this orange 3 ABC for 4 is fine in proportions, and so we should get a 5th wave up, maybe towards the 110 to 150 region, and that would be kind of the final move for a while, and then we'd have another crypto winter with the larger wave 4. I don't think that we're going to get the 3-4 and then another 4-5 after that, because this is just too big now. So I think it's probably not that alt, and either this was just kind of a muted top, and this is working on trying to find a bottom for that 4th, or it's the wider flat in the orange as A, B, C for the 4. So there is some good potential. Ryan is following these charts much more closely in the crypto service. So nice long-term potential if they can find a bottom, which, when you're talking about crypto, just a slight extension to a nominal new low is easily 25 to 40%. So you have to be really careful with position sizing, and I would rather wait for a reversal off the low and have it hold a higher low before going in with any size again.
Excellent. Well, I believe that's all the questions we have for today, Zach. I want to thank you for a fantastic presentation and for being a longstanding partner with Money Show, and I'll leave it up to you for any closing remarks before we wrap up.
Nope. We offer 15-day free trials, so look forward to seeing some of you guys in our trading room. We try to have some fun and make some money at the same time.
Excellent. Well, thanks so much, Zach. The links are in the chat as well for some of the commentary that you mentioned here as well for the group. Have a wonderful day.
Thank you. Take care.